All right, hello traders, and welcome to this live intraday strategy session. Today is Tuesday, February 24th, and I'm Michael Boutros, currency strategist. Stefan, thank you for that video and audio. Okay, Petro, Eileen, Chintan, Mark, great to see you guys all in the room. So we have a lot of setups in play. On the swing side of things, I do believe we're still on the sterling dollar short, which has also been featured on the scalps. We'll take a look at that. A dollar knock short is also in place on the swing side. I'm not in that position, but also something on the menu. From the near-term charts, the focus across the sterling pairs really remains central for me. Where sterling dollar is, sterling yen, sterling kiwi. We'll even take a look at sterling Aus today if you guys want. Very interesting thresholds to start off the week here. Quick relative performance on where we are as we head into the opening of U.S. trade. Here's what the relative performance against the greenback looks like so far today. Still a broadly stronger dollar. And in fact, if we look at the dollar index, not really surprising to see that type of performance right now. Okay, Swissy with a minor gain here, but pretty much weaker against all its all its major counterparts are weaker against the greenback. As far as the dollar is, or as far as the dollar stands specifically, I mean, guys, we can't ignore this. It's just too clean. It's just too clean. So we were looking at this yesterday. We were looking at momentum flattening out as we came into the support structure. Remember, for the dollar index, you got the monthly opening range low also now coinciding with that lower median power line. And it looks like here we're going to be watching this trigger on a closed basis. If that trigger gives out, you look for a rally back into the highs. Still, the range is pretty well defined at 11,750, 11,880 here for the dollar index. So again, we can't trade this specific instrument stateside, but it gives us a nice graphical representation of the base dollar move that we're watching. So with that in mind, let's jump into the scalps. So British pound, here's what we were looking at as we came into the close of trade yesterday. Daily chart still has us within the confines of this formation here. Remember, 54.78, 54.80, still key resistance near term. Here's what the 30-minute looks like. And here's what last night's scalp looked like. Okay, so as we came into this region, we just wanted to note that the weekly opening range was now set. 54.80, very, very nice level. Again, that longer dating 236. On the tag that we got yesterday, it was at the exact confluence of the upper median line parallel as well. Oops. I'm lying. Oh, it's in the confluence of the 618 retracement and that 236. That gives you 54.66 into 54.74. And that's exactly what caught that high there in overnight trade yesterday. So as we came into Asia, as we came into Europe earlier today, the opening range for Europe got set right down here, 54.30. The opening range high came in just ahead of major resistance. Looks like you got a break of not only the European opening range low with this move, but also the Asia opening range low. So I'm personally holding a small short in this position, looking for a move into 54.05 as an initial target here. We'll look to play it from there. I'm a little concerned about the position, guys, and I'll tell you why. We're fighting the momentum signature. Okay, remember, since that fly that we made on Wednesday of last week, the momentum signature turned very bearish, with every subsequent rally turning ahead of 60. You got that 40 break late in the week. Opening this week started off pretty bearish. The rebound that we talked about yesterday, right after the webinar, that continued into the highs, now invalidated 60, invalidated 70, and found initial support at 50. So I'm going to be very interested to see what happens here. If price gets into the 54 handle and momentum starts to hold this 40 region, I'd be more than likely to just tick off the entire position. But that's what we're looking for near term. If we break above that trigger line there near term, you want to abandon the short side of the trade. But as it stands right now, guys, this is a little bit too early to be necessarily giving you a conviction short here. We're still within the initial weekly opening range, which is taking place just below key resistance. So we're going to keep that in mind. But that's sort of the game plan here moving forward with the pound. In fact, on the swing side of things, the stop was at 154.80. So we literally just missed getting stopped out here by a couple of pips. Good thing here we are turning over again. So it's starting to look pretty good. Again, for me, initial target's 54.05. That's the opening range high for Asia Pac on Sunday. It's also the 50% retracement of that decline from last week's high. And then you start to look at this same region. Okay, so remember yesterday during the webinar, guys, we were talking about this near-term region of support, which found and launched that rebound. That went through the opening range high for Asia Pac, keeps the upside focus in play, 54.38 and 54.74. 54.66, this region here. So I just want to give you a broader view here. If you check out the scale chart on SB, sometimes it's a little bit clearer to see the broader view. But I just wanted to highlight, this confluence region here between the median line and this median line parallel. Really nice pivots off that level, and that's exactly what caught the opening range low. So if we get the break below 54, I know that the scalp setup here is talking about the weekly lows in such a scenario, but just make sure that you keep in mind this region here. It might come ahead of the weekly lows. Obviously, based on time, that level is actually going to be dynamic. The game plan still remains for sterling. Bearish invalidation, still 54.75, 54.80. A topside break here. You look to play the upper median line parallel there. Any questions on the pound? Quarter daily TR is looking for about 28 pips per scalp on this one still. Hey, thanks for that, Eileen. Eileen's saying the video keeps flashing back and forth with the wallpaper. Is everyone getting that issue? Yeah, it seems like some people are getting it. All right, thanks for that. Give me 1 second. Dale saying I kind of liked it. Keep seeing a castle or something. Yeah, it's my wallpaper, Stefan. Give me 1 minute. 1 second, guys. Just going to switch it to something more basic. Hopefully that'll resolve that issue. All right, guys, let me know if it keeps happening. We'll keep going, but we'll keep an eye on that. So that is the British pound. We'll see if we can get any kickback on this play, but that's still the major focus is against that major key resistance at 154. Let's just call it 154.80, 154.75. Moving right along, sterling yen has been a little disappointing to me. I've been actually much more active in the sterling key, which we'll go over after this in just a moment. But for me, the sterling yen heading into last night's close for U.S. was super clean. Super clean. The low came right into 182.60, which was the exact 50% retracement right there. The high came in exactly into last week's high, which was the major key resistance that we talked about heading into the start of the week. And the focus was to get some sort of short trigger up here, to get a turnover in momentum. You had this trigger in momentum here that I noted in the report. Never gave out. In fact, we saw a crack of the 184.26 level, but that rally fizzled out right at this median line. And that's something I wanted to talk about with you guys here today. I hope no one got suckered into that position. Remember, even if we get an opening range break, we can't ever overlook basic support and resistance, right? Nothing supersedes basic support and resistance. But if you get a break of the opening range, or if you get a break of a major resistance and it's right there, just be prudent, okay? So again, we were looking for short triggers as we came into this region yesterday. We didn't get any. Here's the short trigger I'm still waiting for from that report. And we'll see if that gives out. Possibly take a position on that depending on if we have the right, risk to reward. But the broader focus is on this formation. I don't think we want to ignore it. Look at how many pivots we've seen on this specific slope guidance, right? And here we are again. So you can see a scenario where, you see a downside break of the momentum signature here, maybe break back below the 84 handle, stops against the high. You look to play it lower, but it's going to be pretty tight. Remember, on this one, you got 47 pips as a quarter of the daily ATR, so you're looking for 45, 50 pips per scalp. And as long as you can put a stop that distance away acceptable, with that conviction, then we'll see if that short trigger gives out. At the end of the day, I need to see it break back below that 84.26. Remember on the daily chart, guys, sterling yen, this is a pretty huge region of resistance. Okay, again, that's 618 off the high, longer dated 50%, the R1 monthly pivot, the monthly highs. I mean, you name it, it's here. So we'll have to see how this looks. Now, what would put me on the long side? If you're asking, hey, Mike, what would really just get rid of this idea of trying to fade against this resistance? Very simple. Topside break in momentum above 60 and a close above 84.30. Okay? That you wouldn't want to fight. Okay? In that kind of scenario, you essentially want to start planning for 86.35 and beyond. So that's my idea here with the sterling yen. I think with what sterling doing here, I'm not too surprised to see this, but I'm not buying this breakout just yet. So we'll keep our eyes on that. We'll keep our eyes on the short trigger to see if it gives out. You might even get a stretch into a new high to test this median line again, which would give you some divergence, and then a trigger break. That might be the play heading to U.S. trade. That being said, I'm looking for a break of this range with momentum conviction to get back into this position. All right. So that's sterling yen. I missed a question here by Petro. Petro says, was the trigger on that sterling position or just an opening range break? There was a trigger, Petro, but it was kind of really tight. I'll show it to you. This is what I was looking at when I was taking that pound position. So here's what I was looking at on the actual 5-minute. All right, so here was the Sydney opening range low in turquoise. Dark blue was the Tokyo opening range low. They all came in at 54.30. Do you see this? And then when Europe came online, obviously, guys, I'm not awake all night trading this, but Europe came online today. The opening range for Europe came in just below or just above that range there, 54.30. So after this rebound here held 60, okay, after we broke back above 50 and this failed, I actually jumped into this position a little earlier. I actually jumped in right around here on this upswing and failure to hold 50. I actually jumped here because it's a very quick no. Okay, you know if you're going to be wrong. You had the opening range high for this session, but also just near term, guys. Don't rule out just basic technicals. That wasn't the slope I used. It was this slope. Don't rule out your basic technicals, right? 3 tags confirms trend line. So jumped into that with a really tight stop just above that swing high at 54.50. I'm still looking for a job. Like I said, my limit's on 54.08. A couple of pips on the inside here. So we'll see if it triggers. If it doesn't, if it breaks back above this, you might bring the stop to break even at that point and see if you can get another turnaround. But if we break back above this feature, I'm not really going to be looking to hold that position any longer. Remember, we don't have the opening range break conviction for the week. And that's really the meat of the play, right, is when that weekly opening range gives out. So, and we're fighting a pretty strong trend. So I am trading half leverage to begin with. But for me, it seemed like it was worth a shot. The real trigger here, guys, was right here yesterday on that stretch, right about afternoon time, which is not the best time to jump into a new position. But the break back below 70 in momentum, specifically the break below 60 here. 154.73, 154.80 was such a critical resistance. Remember, this is the stop loss at 154.80 on the swing trades. So the barrier you're trading against. It would have inevitably been a slow burner, but you would have gotten to squeeze out a couple of those quarterly ATRs on that move. Petro, does that make sense? Sometimes you got to finesse the target. It's not always going to be a simple trigger break with break in momentum, right? Sometimes you just got to sort of finesse it on where the upswings find resistance and such. But that's the idea that put me on the short side there. Hope that makes sense. Petro says, yes, I saw that one too. Just didn't have the conviction. Yeah, thank you. I don't blame you. A lot of times you kind of just got to take a stab on it to get your foot in the game here. We've been looking for a short. I kind of got teed off yesterday when this came all the way into this major resistance perfectly, and that held you had a confluence with that upper median line parallel. There was all the reason in the world that keeps snapping down to try to press it here, but I'm not really one who's going to try to fade a rally that strong. So it was good to see this thing at least head into Asia Pac. And in fact, yesterday, this broke the Asia Pac opening range low to the downside. So the initial open here for Asia, this is what I interpret as the opening range break. Didn't quite get the full extension, 30 pips to the downside, but if your stop's at the highs, you would have still been in that position on this last swing here. Remember, every time we attain 28 pips or somewhere in that region, we're doing something on the trade. All right, so that's pound dollar. That's pound yen. Objectively, I do want to take one step back, guys. You know that I'm still looking for some sort of reaction up here, and I would like to play this short, but objectively, all things held constant, this could be interpreted as an opening range break for the week. So you want to be very cautious above the 84 handle, which is why I want to see this trigger give out with a break sub 84 to invalidate that as a quick false break. But objectively, Monday, Tuesday range, you set a high, you defended it and broke right through it. So be cautious of short exposure until you get back below the 184 handle for sterling yen. A topside break, I do have a soft target at 85, but the major target is going to be 186.35 or somewhere in that region for a 764 completion. All right, all those levels are still mapped out on the scout page. All right, Petra, I appreciate that. Sterling Oz, we'll take a look in just a moment. Chintan says, get the trigger break towards downside. Can you look at Sterling Oz? Aussie Dollar and Sterling Dollar. Chintan will definitely do that. We'll definitely do that. Just let me cover Sterling Key. I think that's my favorite play, actually, from the Sterling crosses that we've been covering here. So you guys remember we highlighted that region yesterday in the webinar for Sterling Kiwi right here? Well, it came right into it and held as resistance. So start off the week setting an opening range. We talked about this yesterday in the webinar. Again, we had set that high. We defended the low, and where we rebounded was a speculative, let's call it, median line formation that we added early in the week. Again, he didn't know until he got this tag here that this was operative, so I leave it dashed until it becomes operative. So you got the rebound, your initial target on the upswing with a perfect rebound in momentum off 40. Initially, you're looking right for that confluence region. You had the median line off the ascent, the upper median line of the decline, and 38.2 retracement from the advance off, or the decline rather, off the monthly high. So all was stacked up right there. Okay. We noted that we were looking for the pullback for triggers to get back long. Guys, this didn't even break maybe like 3 minutes after I posted it. I apologize about that. I had no clue that it was going to give out that quick on some Kiwi data here. But nonetheless, you got the pullback, held at 50, and then the trigger break, and that really launched you right through. So I missed this entry too on the break, on the initial break here. Initial targets would have been 206.26 and 206.98, basically 207. This region was the extended play, and this is now near term the bearish invalidation level. All right, you're looking at a basic trendline resistance off the highs for the month. 764 retracement from that same decline, and the upper median line parallel for the operative structure. All right, so here's again a momentum trigger, support trigger that is pending. You see a bounce off of this region, especially again if you get some divergence into the highs followed by a trigger break. That's when I would try to short this or try to play a counter trend trade. Keep in mind, broadly speaking, you're looking at a pretty nice setup here. Daily chart, also testing momentum trigger here dating back to December at this point. So not really have an appetite necessarily right now for a long sterling Kiwi any longer. We missed that opportunity yesterday. Boo-hoo, there'll be plenty more opportunity. And I think at this point you start to play the correction. If anything, guys, on the correctionary stance, if you do get a trigger break here or the opening range for U.S. breaks to the downside, initial targets you're looking just for that median line first. Okay, where that coincides with the 50% could be a nice level, depends on the speed of the drop. But this is sort of where the appetite starts to dry up for the short side because, again, we don't want to fight this near-term uptrend unless we have enough validation for it. So that's the initial target I'd be looking for, on a downside swing here if that resistance holds, which I personally think it does today. But we'll see. All right, my favorite setup, guys. My favorite setup. Not only in the cleanliness and the broader just sharpness of the levels, but also you're working with a lot larger range. 66 pips, 64 pips per scalp should suffice on this one. You got the room. It's not that hard to try to identify your entry because you have that room to put the stop, 40, 50 pips away, which is typically, greater than most of our scalp targets. So I do favor Sterling Kiwi out of the three that we have posted on SB. Kind of need to stalk this one a little bit closer. Okay. Last but not least, quick look at the gold outlook. Look, at the end of the day, we came into this. We talked about this at length yesterday, so I don't want to beat a broken record. A close below 11.95, 11.98 is what will put me bearish, period. I said it yesterday, and I said it again today. I'm cautious about any short exposure above 11.95, 11.98. Even when we were trading here yesterday, remember, we were probing well below this. We noted, guys, we need to see the close below. Okay? If the market does not close below it, you can't continue to favor the shorts. And in fact, not only did it not close above it, or below it rather, but it even put in a doji on the session. Literally, guys. The open was 12.01. The close was 12.01. Okay, I'm not going to split hairs over some cents. So I still think at risk, for a near-term rebound here while above 11.98, 11.95. Again, bring your attention real quick to that basic trendline support off the lows, which is right there as well. So the only thing that would put me back on the bearish camp here, guys, would be a break and push back below this highlighted region here. As long as we stay above it, I'm just looking higher. I'm looking for a possible rebound. You don't have the conviction to take the long yet. We need the trigger to do that. But I wouldn't want to be jumping into anything else short from here. All right, so those were the setups highlighted on the intraday trade page for SB. Now it's time for the fun part. I want to jump into all your questions, your setups that you guys are looking at as well. Take any strategy questions you have on these setups. So Chintan says, Sterling Oz, 30-minute, get the trigger break towards downside. Can you look at the Aussie Dollar and Sterling Aussie, please? Sure can. But before I look at Sterling Aussie, I'm going to look at the Aussie Dollar that you want to check out because I think that one was pretty compelling yesterday. I'm thinking about Sterling. I'm thinking about Kiwi dollars. I tweeted a chart on that one last night, which also looks pretty compelling. Here's what the Aussie looks like. If you guys recall, I took it off of the intraday page just because of where we were to start the week here. Now, I'm sorry, guys. Give me one sec. Okay. So, for the Aussie, sorry about that, guys. If we're working with this basic slope formation, if you guys remember, we were working with this one for a while. We got the break of the upside early last week. Another slope formation mirrored of that same direction off the highs here for January, specifically on the 21st here, has us just kissing it, former resistance as support at the 50% confluence with the rally. So, into this decline, I don't want to call this divergence, guys, because it's not actual divergence. This point is slightly lower than this one. On the broader view, there is divergence between these reference points, but my point being is this. You have a super clean... super clean trigger here. Sorry, guys, I had this all drawn yesterday, but I did not save that chart. So trigger right here, basically. And if we move back above 77.70, you might play a near-term reversal here in Aussie dollar. Here's a quick retracement I would tack on once we get that trigger. You don't have much validation that that's necessarily a low yet, but I'm going to take that 38.2 out for now. These are sort of the levels I'd be looking at for a swing to the upside here in Aussie dollar. Inevitably, again, we would be looking to short this, but near term, you're looking at the confluence of that 50% with that former trendline resistance. You could see a little bit of a bounce. Again, momentum back above 40. Let's see if we get that trigger break, give you a little bit of a rally here. Medium term, guys, you're looking to use this rally to get back on the shorts, scalps. You know, it would be opportunity just to get to long somewhere around 77.80, 77.90 there near term for the Aussie. There's a reason it's not on the intraday page, guys. I just don't like the formation that we're in right now. I think there's a lot of chop. Looks like it could be some broad trying to turn formation here, so you start to really position for a stronger downside break. Long story short, with 25 pips, I think there's a lot more opportunity elsewhere. So I haven't really been focused on the Aussie dollar anymore. Sterling Aussie, which is what you want to look at, Chintan, looks like this. So the interesting part about this is last week on the break above this confluence region, I was willing to dismiss that as a near-term false break. You had a major long-term 100% extension, the upper median line parallel of a very, very neat formation here. And we pulled right back below. I don't really know what to do with this, which is sort of why I'm not really on the camp of continuing to scalp this pair. I think you wait for a definitive break here or a rally into that upper, what was that, the 202.30 region, the 1618 confluence there with that trend line resistance, which is just a mirror of the support here. I think this is where you start to look for a little bit of a correction downside. Right here within this range, Chintan, it's not really my cup of tea. Let me show you what the scalp looks like. It's a little bit cleaner. Here's your weekly open. I forgot that was on the other chart. That wasn't saved either, so we'll go ahead and tack this on real quick. Key area of support. And again, there's that upper median line parallel. You can see we've still been pivoting over it. Support, support, break, pivot, pivot, break, support, move off. And now I do want to just check. Let's see if there's anything near term here. Okay, so median line off the low from last week actually does give us resistance right up here at 99.30 where we just came off of. So this is going to be near term, your key resistance. Okay, so this is divergence, right? Higher high, higher high, higher high, lower high, lower high, lower high. But all three reference points are above 70, and I do want to highlight these are typically your weakest signals. So the closer the divergences happen to the 50 median line, actually the cleaner and the more conviction they become. You did have a trigger that gave out there. That's null and void. We missed it already. And bear with me one sec, guys. I know it's going to get pretty messy. I just want to check something out. Right. Okay. Okay. All right. Those are the levels I'd be looking at. That's the new amended scalp setup here for Sterling Oz. So Chintan, you were saying the 30-minute trigger break towards the downside. Can you look at the Aussie Dollar and Sterling? Okay, so I do see the trigger break that you're talking about on Sterling Oz. Again, it's too late to do anything with this operative trigger. I'm not going to jump on it. You're about an hour and a half out here to try to use that as justification for jumping into a new position. I do like the level that we turned off of. So we'll look for support around 50. We'll look for support around 60. Maybe another push into the highs gives you some divergence with the ability to try to play the shorts again. But right now, you tag the median line. Objectively, you're looking for a move back into the lower median line. Okay, so where that is in time, again, is going to be the variable here. Pretty compelling reversal, though, near term. Chintan, does that help on Sterling Oz? 62 pips here. Nice, healthy quarterly ATR. Looks pretty good. Looks pretty good. Chintan says, if that's good, if we draw the trend line for RSI trigger based on the PA high and low. What's PA? The Pacific, the Asia Pac highs? Is that what you're talking about? Price action highs? Right. If we draw the trend line for RSI trigger based on the price action high and low. Right. So what I was telling, I think you're referring to what I was saying to you yesterday. When you're drawing these triggers, sometimes it's best not just to use the trigger off of the high necessarily in the oscillator, but more so the high in price. So here is an example where a lot of people would be looking at this trigger, right? Well, that's all good and dandy, right? It is 2 points. It is a trendline resistance. But guess what? If we take the high in price action and draw the trigger off of that high in momentum, a lot of times the trigger will come much earlier and be much more of an operative play, right? So we're using the same reference points. If we're just looking at this in time, okay? Instead of using the high in oscillator, use the high in price. A lot of times it'll offer much cleaner trigger. Does that answer your question, Chintan? I hope that's clear on that front. Will says, oh, okay, you got it. All right, cool. Will says, dollar CAD, nice pullback on the 15-minute chart. Is that a good place to enter a long position? Let's check dollar CAD. A long position from here on a scalp basis? Will? If you're looking at a 15-minute chart, no, I wouldn't necessarily. I mean, here's the thing. 26.46, 26.50 is pretty big for me. That's my concern on trying to play a long from here. You're trying to get long after a 5-day stretch to the upside. That's tough. That's tough for me to be excited about that. Let's look at the 30-minute real quick. Okay, where I would be looking to possibly start attacking the longs, I'm not really going to stress this formation here, guys, right now. But what I want to look at is this basic trendline resistance off the highs. We had a false break earlier in the week. If this is the real break, come back, check former resistance as support would be the first area I would start to look to get back on the long side, Will. That takes you down, another 40 pips from where you are up there before you start to even look higher. I just don't have enough validation on this slope to necessarily take a long from here. Yeah, and you don't even have an opening range break here too, Will. So let's just say for argument's sake, this was the weekly opening range. And last night's pathetic attempt at testing the lows, that was a test of the lows. So you're now looking for this range break. This would technically put us constructive, but we're right back below that. So that bias no longer can be my justification for trying to press the longs. So, hey, swing trades really ripped up dollar CAD. Just giving props to Jamie the other day. Really, really nice moves on that one. So at this point, I think prudence pays on this pair. And we look at this every day, but it still hasn't been on the menu for me. In fact, guys, add an 88.6 retracement to that decline. It's almost the exact high that we just caught in overnight trade. Well, does that help, man? Could also try to work with this slope here. Something to that effect might be what's at play. Either way, I think you get a little bit lower. In fact, you know that region we just talked about? Well, it's funny. If you adjust this to match those highs and lows, that region we were just talking about, the break of resistance, check it as support, now lines up with the median line off that low. So we'll highlight this region as sort of the initial spot you'd start to look for possibly trying to play a rebound higher. Just keep in mind, man, it's been a 5-day stretch to the upside. I just don't typically like to scalp those, extended plays already on a pair that's made a 5-day stretch. It's really rare that I'll start to play the long side after that. You know what I mean? Will says, okay, thanks. Sure, I appreciate it. Right on, Will. Right on. All right. Okay, going through more of your questions here. What do you think about the dollar-yen? Lubna says. So the dollar-yen hasn't changed from yesterday. I don't want to spend too much time on this. You guys know where I stand on this one. Listen, it's just not worth it for me right now. Like I said, we're following pairs, guys, that have 250 pip ATRs, daily ATRs like 40, 60 pips. On something like this, it's just not worth it to me. It's just not worth it to me. If anything, I'll still like to play this versus the pound, right? So I'm not really going to be too excited about the dollar-yen setup. Don't get me wrong. When the setup's there, guys. But the only thing I'll note on dollar-yen is this does look to me initially to be a weekly opening range break. Here's your Sunday open. You test the lows. It happened to be support confluence 118.80 to 118.90. We tried to drill below that in overnight trade. Momentum held exactly at 40. Right, with the upswing taking you right through the overbought signal. So from a momentum standpoint, it is a constructive trade. From an opening range standpoint for the week, it is a constructive trade above 119.35. My problem is that major key resistance just ahead, and that's going to be 119.75 into 119.88. So take it for what it's worth. The opening range for the U.S. is actually really nice here because it's panning just above this region. This would be near term the bullish invalidation for the scalps, right? So if you have the U.S. opening range take shape here, you get a topside break at that range. Look for the play into 119.80, 119.90. Near term bullish invalidation 119.35. Lubna, does that help on dollar-yen? As always, guys, feel free to take a snapshot of any of the charts that you see on your GoToWebinar screen. If you need to see this for future reference or follow along, you can always take a snapshot by clicking on the camera in the top right-hand corner. All right. Let's take a quick peek back to the British pound position that we're in, see if that's panning out at all here. All right. Remember, initial targets on this one is 54. 54.08 is where I have my limit, but we'll see. If we have clear momentum conviction, the limit is to take off half the position. It's a very small position, so there's only going to be a half left. But if it breaks to the downside, like I said, guys, the retracement that we tacked on earlier today, it's too early, but something like this, okay? And that highlights, if you get through 54, it highlights 53.85. That's going to be the 618 of the ascent. So actually it might be worth it just to leave this on here for now. And this is the initial target that we need to get through as support. All right. As a disclaimer, guys, as we open the U.S. session, as we get into the 9:30 hour, if we hold this range, I'd be much more inclined to put the stop, bring it down from entry to the opening range high for the U.S. And in that way, if that opening range high, you're out of that trade pretty quick. You know exactly what's going on. Okay? Adrius, great to see you. Morning, Mike. How about Aussie Kiwi? Your thoughts, please. Aussie Kiwi. Let's take a look. Here is the daily chart. Oof. All right, guys. So this is I actually remember looking at this with you guys last week. The same exact range that we're talking about is still in focus. Okay, you're basically looking at 104.28. Let's just call it 104.30 into 103.50. 103.50 is the lows that you made back here in January. It's also the low day close. So the low day close for 2015 so far is right here, 103.57. So just above that low, 103.57 is going to be the close for on the day the low was made. So that's support structures in view. Resistance, very, very clear. The S1 monthly pivot, that's objective. The median line bisector off the highs from September. Okay, and I'm not sure where that 100's from. Hold on one sec. The 2005 low. 2005 low at 104.28. All right, so there's a lot here. So for me, Adrius, I'm really inclined to trade this one as an opening range break in and of itself between this region. Now, it just so happens that the weekly opening range is that region at this point. Okay, here's your Monday open. Highs right at that resistance, lows right at that support. So I'd be looking for a break of this range. Topside break, you'd be looking a little bit more for a sterner recovery. On a medium term, you'd be looking for a rally until a 105.75. On a downside break, we're in territory we haven't seen before, guys. So don't really have many downside targets on that type of a situation. Let me check, see what the near-term chart looks like for Aussie Key. Okay, here is your opening for the week. Guys, I'm sorry about that hammering you hear in the background. Still some construction going down. Okay, so that's your weekly open. Okay, just need that adjustment. So there it is. And in fact, yeah, like I said, the weekly opening range is ridiculous here, guys. Eileen, thanks for that. I think someone pointed it out yesterday, so I just wanted to preempt the comment, but says I can't hear the hammer. Your noise-canceling mic is doing a pretty good job. All right, good to know. But guys, the near-term chart highlights the same exact weekly opening range, and that's the only thing I want to be focused on, to be honest with you, Adrius. Listen, if you put a gun to my head, I actually would look to play the upside, just because I think from a technical standpoint, I do think Kiwi's a little bit more at risk here. But that being said, you got to take every trade on its own merits, and right now, this is right at resistance. Now, a near-term retracement off the highs is something I do want to consider, just from the February or the January-February range. I'm not going to stress that 236 because we've already gone through that. Okay, I don't want to stress this 50 either. And this will be the highlighted key region here, near term. All right, might be something like that at play, right? So this is too early to tell because you don't have any rebounds or reference points to play off of. So again, we'll put this as a dashed formation for now. Once the median line gives us a couple more rebounds, be a little bit more comfortable trying to actually work off this. But opening range taking place, that's the structural advance you would look for on a topside break. A break below the lower median line, you're basically looking for the weekly lows. And again, until you get the break of the weekly opening range, which is just yesterday and today's range, you'll want to stay a little bit more of a neutral bias. It does look like we are putting in some sort of near-term low here on this turn. So on a trade like this, the momentum signature is not really going to be helpful. You start off the week above 60, next day sub 30, right back above 60. Don't stress those here, guys. And in fact, just a quick note on a lot of the com crosses with some of the majors, Aussie, Kiwi, Sterling, Aussie, Sterling, Kiwi, things like this that have a larger, or the crosses, rather, a little bit more of the exotic crosses. Just be careful because you'll see ATR go from sub 40 to above 60 and back repeatedly. So when we're trying to ascertain bias, if that's a major function of what you're trying to use, just keep in mind the currencies that'll work better with that and the ones that won't. And the best way to do that, guys, don't take my word for it. Just look back in price action. Just look back in price action. I mean, just here at the highs, right, on this 1 week to start off towards the end of January. Above 60, sub 40, above 60, sub 40, above 60. So you have no way, right, of trying to validate the momentum bias, at least. So with that said, I just want to put a little bit more emphasis on what price action is doing in Aussie Key. Adris, does that help? On Aussie Key, that's sort of the game plan we'll be working with near term. And one more thing. Let's just tack on the extension real quick, see here if this offers anything. Get out of here. All right, it's not too bad. First hurdle, second hurdle. All right, not bad. Adrius says, yes, very helpful. Pitchfork vision helps too. Right on, Adrius. Appreciate that. Mark Lavender says, hi, Mike. You talked about Kiwi at risk. Could you look at the Kiwi dollar? Oh, sure can. I'm surprised we haven't done that yet. So this one I did put out a tweet on yesterday. I apologize, guys. It just occurred to me earlier today that I actually posted that under an Aussie dollar header here as it was coming into major key support. This was actually the Kiwi chart. But here's what we were looking at yesterday. And I just wanted to highlight this key region here. Guys, you see this slope? You see how many times that region has caught a pivot in price? Pivot, 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 consolidation break, pivot, consolidation break, consolidation break. Here we are, just below support. So I just wanted to highlight this region yesterday, right after the start of Asia Pac. It looked like it was making a move. Here's what Kiwi dollar looks like today. Oh, not the daily. Want the 30-minute. Where art thou? There it is. Ah, this one's saved. All right. So do you see this chart, guys? The same exact chart that we posted last night? Okay, we did. We came right into the highlighted region. All right. So what does that mean to you, Mike, right now? What's the trade? There's not necessarily one yet. Okay, there's not necessarily one yet. But what now we're looking for is a reaction. Okay. You could get the same type of deal here. We get a consolidation, then a break lower. You could get, like you got here, a consolidation and a mini rebound. All we know is that the market has reacted to this zone definitively over the last 3 months. So a downside break at the underbelly clears the way for further declines. Initial targets taking you basically into 73.36. A rebound back above near-term resistance, which is going to be 74.68, 74.70. Looks to play first into this trend line again, but ultimately we never got a tag at that 100% extension. Guys, if you take this longer term, this trend line that you're looking at right here, okay, support, 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 pivot break, instant resistance, instant resistance. That's what we're playing the downswing. That's what initially had us looking lower. Not to mention, to start off the week, momentum 40 break, 60 hold, 60 hold, 40 break. Okay, so the momentum signature looks bearish as well. Keep in mind also one other thing. This actually finally fills the gap that we made at the open of trade last week for the Kiwi. So that uncovered gap finally got covered. And again, as long as we stay, the focus is on a reaction off of this region. I honestly don't have a play for it yet, guys, but I do think you get a nice one as you get deeper into the week. On either a recovery play back to the upside, you look to play the opening range high for the week initially, or like I said earlier, a downside break of the underbelly here. You look to play that into 73.30. Mark, does that help on Kiwi? Again, I don't necessarily have a setup yet, and all the while we are looking at the dollar index. Okay, on a downside break here, I'd be really much more interested in trying to play the recovery to the upside. But with this thing, just ridiculous. The weekly opening range is intact, the monthly opening range is intact, which is why a lot of the scalps that you're seeing on SB have really been geared away from the dollar. Just because this thing there's just too much on tap. Now, heading into today's session, you do have Yellen on tap. She'll be speaking for the Senate Banking Committee. There's going to be a lot of questions posed to her, specifically on the back of the data that we've been getting, especially the strong data from the employment gauges, from the NFP prints that we've been getting. So it's going to be interesting to see what tone she has, specifically on the back of the minutes, which showed them a little more hesitant. It looks like they're much more comfortable, siding or erring on the side of caution with regards to holding rates lower for longer. There's a lot of concerns that were brought up during the last minutes that Fed members saw it risky to start to move on rates ahead of what we're seeing in some of the concerns in Europe and just broader risk from the global economy. Obviously, China is still not off the radar necessarily yet either. So just food for thought here as we're looking at all the dollar crosses. This is really what I've been focused on. You can take a look at the ICE dollar index. Looks very similar. But when you pertain that to what we're seeing in the Kiwi, at an inflection range, dollar breaks support, cool. You look to play the rebound maybe back into the resistance level. Dollar holds support within that channel, breaches through the highs. Let's just play right on down to the run down to the south side again of Kiwi dollar. Is that good, Mark? Says thanks. Oh, that's helpful. Thanks. Hey, more than welcome, Mark. Appreciate that, sir. So that's another one I think is really interesting. Okay, we're running low on time, so quick segue into the commodities. We went over gold. I do want to show you some of the charts that I put out on SB last night. One of them specifically was on copper, a trade that doesn't get all that much publicity, but very interesting levels that we're coming into at these, or very very interesting levels at this point. The main region I wanted to highlight in yesterday's tweet here was this 261 into 265, basically 264. You're looking at a very or a longer dated median line parallel, very very clean. Okay, resistance there. You're looking at a basic 236 from the decline off the July highs. Okay, and in fact, the weekly opening range is ridiculously clean just below this. Okay, so you're looking at a weekly opening range of basically the resistance region we're talking about into 255. And a topside break is the scenario that the contingency plan is the topside break leads you into a rally. You're basically looking for that December low. You're basically looking for a 38.2 at 274. Okay. On the flip side, obviously, if the opening range for the week breaks to the downside, you've had a consolidation at resistance. You look to play it back into the lows. I do happen to think you inevitably get a near-term topside break out of that region. So again, a trade that might not necessarily be ready for action just yet, but certainly the focus is on this near-term resistance region here in copper. U.S. oil, here's what crude looks like. We've been looking at this one all week long. Again, remember the opening range for the month here is still intact. We talked about this break being a material shift. There's 48.90. This is where we were yesterday at the webinar. And here's your weekly opening range. call it 51, 48.50. I'm sorry, 48.65. Let's call it right under that 50% retracement. Now remember, the momentum signature did turn pretty bearish here, so we'd be looking for support triggers to hold in order for us to keep that upside bias in play. So if this trigger just gave out here, it didn't really give us a break in price per se, so I don't think that's an operative one, guys. But let's say this thing comes back into this support, especially with the divergence that's going on. So guys, this is divergence. I know it doesn't look like it, but the easiest way to identify that is to bring it to a quick line chart, a lower low, a higher low. So divergence into a trigger break, like I said, 9 times out of 10, these will be the best triggers for you. It's just that price is a little bit uninspiring here as we're not at the opening range extreme. Meaning, if this had happened down at the opening range low for the month, down here, it would have been much more conviction long. But right here, not necessarily getting a break in price action with that move. So we'll wait to see if the weekly opening range gives out. All right, so that's crude. Everyone's going to be talking about this trade, guys, as long as we're in this range because there's calls from all over the place. There's calls for people calling $30. There's calls for people calling $70 again. So doesn't matter to us. We're not going to listen to the noise. We're going to continue to track price. And right now, these are the levels that matter on crude. Okay. So, guys, those are the setups I've been following and what we've been talking about on SB. Let me know if there are any setups or trades you guys are looking at. I'd be more than happy to do some on-the-fly analysis here. Other than that, we'll be looking at the economic docket. Again, watch Yellen as she takes the stage today. A lot of people are going to hang on every single word she says. So you could get a lot of market volatility as she starts to, as those remarks rather start to filter and hit the headlines. But, you know, we know what we'll be watching. And that dollar index, I think, is extremely telling with where we are right now. All right. So, guys, we will wrap it up there. We'll be back tomorrow again at 8:30 Eastern to get another update on these setups. Hopefully, we'll get that sterling in play. Remember, as you head deeper into the week, guys, you do have Carney, who's going to be on tap. I think it's Thursday. And then, obviously, that's some GDP data out of the UK as well later in the week. I'll keep you guys updated on the SB Squawk. Till then. We'll see you tomorrow morning, guys. Have a great day trading. Cheers.